Then the materiality concept. See, what is the meaning of materiality concept? Very important. So you want to know the significance to the overall financial picture. So company wants to know the fully the financial position, the overall picture, materiality. It's nothing but what's the materiality concept. So it refers to an item's importance to a firm's overall financial operations. Item must be make a difference to be material and be disclosed. It is a matter of the relative significance of the element. Should be related to the business, related to the transaction. So nature of the transaction, correct. That's what here the materiality concept is very important here once again. The concept of materiality requires the accounting should focus on material facts. The effort should not be wasted in recording and presenting facts which are immaterial in the determination of income. So here the question that arises here, what is a material fact? The materiality of a fact depends on its nature and the amount involved. So any fact would be considered as a material if it is reasonably believed that its knowledge would influence the decision of informed user of financial statement. That's why the materiality concept is very, very important based upon the nature of the transaction. Okay. Then a very important one, prudence concept in accounting. A concept called prudence or conservatism concept. It's a very, very important one, this concept. So yeah, the revenues and profits are not anticipated, correct. So only realized profits with reasonable certainty are recognized in the profit and loss account. So however, provision is made for all known expenses and losses, whether the amount is known for certain or an estimation. So this treatment minimizes the reported profits and the valuation of assets. Okay, that's why once again, what is the prudence principle? The main concept is here, don't anticipate profits, but provide for all possible losses. So whether going to earn profit or not, definitely we want to account our losses. Correct. That is the main concept here. That's what it is called conservatism or prudence concept. So it takes into consideration all the prospective losses, but not the prospective profits. The application of this concept ensures that the financial statement present a realistic picture of the state of affairs of the enterprise and don't paint a better picture than what actually is, correct. So you want to know the exact picture, the actual picture of the company. So for that, definitely you want to disclose the company's losses also, whether they are earning profit or not. That's why it is called prudence or conservatism principles. Very, very, very important principle. Okay. Then next one is cost concept. Here, what is the meaning of cost concept? A cost concept principle. Here, the cost concept deals the purpose of accounting. All transactions are recorded at their monetary cost of acquisition. So assets are normally shown at the original cost of acquisition. Okay. So any changes in the market value after the purchase are ignored. Here the historical cost is the most objective measure of the value of an asset. So however, it cannot reflect the current value of the asset. So always bother about only the cost price of the asset. Correct. That's why it is called historical cost. So what is the meaning of historical cost? So assets should be shown on the balance sheet at the cost of purchase instead of current value. Okay. The cost of fixed assets is recorded at the date of acquisition cost. The acquisition cost includes all expenditure made to prepare the assets for its intended use. It included the invoice price of assets, freight charges, insurance or installation cost. For example, when you are going to purchase a machinery, the purchase price of the machinery, the installation cost and transport cost, everything all together coming under historical cost of the fixed asset. Correct. That's what here, always on the purchase instead of current value. That's why it is called historical cost. Okay. Then the matching concept. It's a very, very important one. So what is the meaning of here? Matching concept. Here the meaning of the matching concept states that the revenue and the expenses incurred to earn the revenues must belong to the same accounting period. Should be related to the that related revenues and expenses, not any other period. Correct. That's what here. For determining income of a year, only that in expenses which have been incurred to earn that revenue should be taken into account. So the net income for the period is determined by subtracting expenses incurred from revenues earned. Correct. So that's why income is equal to revenue minus expenses for the particular accounting period. related that period. That's why it is called the matching concept. Matching the relativity of the particular year. It's a matching concept. Correct? Then the dial aspect concept. It's very, very, very important for our accounting transaction. What is the meaning of dial aspect concept? For here, see debit and credit. They shown here. Later on, going to learn. So what's the meaning of debit? Here there are two aspects. Correct? What's the meaning of dial aspect? The foundation or the basic principle of accounting. Every transaction has a dial aspect. It affects of two accounts in their respective opposite sides. Correct? So recorded at two places. Correct? So both the aspects of transaction must be recorded in the books of account. So like assets is equal to liability plus capital. So what is the meaning of dial aspect? So each transaction has two aspects. When a business acquires an asset, it has to pay money. Acquiring an asset, and for that particular asset, paying money are two sides of the coin. Correct? That's what two aspects. One is giving part, second one is your receiving part. Correct? Similarly, the asset is acquired through credit. There arises a liability to that extent. Correct? Thus, if there is an increase in asset, there will be increase in liability also. Correct? When you purchase any machinery, your asset increased. Similarly, your liability also increased for our credit purchase. That's what here the equation asset is equal to liabilities plus capital, or capital is equal to assets minus liabilities. That's why the dial aspect concept is very, very important. So what is the meaning of dial aspect concept? It is called two aspect. It's giving aspect, receiving aspect. For example, when you go to market, you have to buy the any product. You are paying money. Similarly, the relativity of that particular product, you got the product. Correct? That's why dial aspect concept is a very, very, very important one. Then the revenue recognition concept. What is the meaning of revenue recognition concept? It's a very, very important one. See here they're showing some example here. Earning process complete. Correct? The production. After the production process, the salesman giving product to the customer, exchange transaction. Finally, we are going to accounting for the recognition for the particular period, a particular year, a particular transaction. Correct? See here, what are the principles of revenue recognition? The principles provides that revenue is recognized. Correct? That revenue is recognized when it is earned and when it is realized or realizable. So revenue is earned when the earnings process is substantially complete. Correct? So revenue is realized when goods and services are exchanged for cash or claims to cash. Similarly, revenue is realizable when assets received are convertible into a known amount of cash. That's why here revenue recognition is very important. It's related to the revenue earned during that particular period after the process. So when it is earned, realized for the recognition of the particular income part of it. Correct? That's why revenue recognition is also very, very important. Then the objectivity principle. Here, what is the meaning of objectivity principle? It's a very important one. Here, objectivity concept based upon the evidence. Correct? So accounting records are based on objective evidence. Okay. So without evidence, the transaction we can't do it. Correct? So based upon the evidence only, we are going to prepare the transaction. Correct? So what is the objective principle here? The objective principle requires a transaction to have a basis in fact. Some form of objective evidence or documentation must exist to support a transaction before it can be entered into the accounting records. Okay. So basic documents required to prepare a transaction. So based upon that transaction only, we are going to enter in our accounts. Correct. So such evidence is the receipt for the payment of a guest check or the acceptance of a credit card or a billing, a house account that supports the and sales revenue. Correct. That's the objective principle. It's a very important one. So it may be reliability concept, objectivity concept. The information must be reasonably accurate. Should be accurate. So information must report what actually happened. Correct. So information must be free from bias. Correct. So individuals would arrive at a similar conclusions using same data. Correct. That's what here. The objectivity principle, the source document is very, very important. The accounting information is supported by dependent unbiased evidence. So it is intended to make financial statements useful by ensuring the reports reliable and verifiable information of source document. That's why here we are going to discuss for the different concepts. So some totally 12 concepts, 3 basic fundamental assumptions and another 9 basic assumption conventions. So please, I request you to please go into try to understand this concept. So these concepts and principles very very important for when you are going preparation of the accountancy for future classes. That's why the accounting concepts is very 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 important. I hope that you understood this concept and read well once again every time. Okay. So thank you very much for watching my presentation. So thank you.